Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was a very whipsaw price action overnight after the annual rate of inflation in the US fell by more than expected in October, which has dramatically repriced expectations for the US Federal Reserve rate hike path for December. The annual inflation fell to 7.7 in October, down from 8.2 in the September release, and below the 8% expected forecast. The core measure of inflation that strips out volatile energy and food prices eased to 6.3% from 6.6, again below expectations of 6.5. The monthly increase in inflation, however, was 4.4% instead of the forecast of 0.6%. While the monthly increase in core inflation was 0.3% instead of 0.5 expected forecast. Now, the rate of the US inflation has fallen for 4 months in a row now, and from the peak of 9.1% in June is now at 7.7, as mentioned earlier, is the lowest rate since January. Meanwhile, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, rapidly lost momentum after the US inflation announcement and displayed a 2% meltdown, posting its worst fall in over 10 years after changing hands in the boundaries of 110.86 to a low of 107.56. From the savage fall, the market is now looking to see where objectives have been reached or not. And looking at the Australian dollar, we have reached that which was at 66 cents, clearing the 60-day moving average, which was around 65.65. Let's see if the market can continue on. We may see a bit of profit taking as this candle is very strong, and from the range that we had overnight, no doubt the market will trim back some of their positions just in case we see a small pullback towards 65.65 and the base now seen at 65.15. Looking at the euro, the market surges to the expectations of the target of 101 to 103, and that's still looking like it can reach, as the market is potentially firm after the ADX now supporting a modest bull trend. In light of the pattern, I feel that we could see a small pullback first to 101.55 with a base of 101.20, but overall looking towards 102.25 and then 102.60 on to 103. As the dollar plummets, the dollar yen has actually followed suit, reaching its objective or exceeding its objective of 143, and it touches a low around 140 this morning. From the meltdown, the market may actually show a little bit of momentum in terms of recovery, and therefore looking back towards 142.15 and maybe on towards 142.60, and now we'll see a cap around 143.30, 40. Sterling, well, the market's nearly reaching its objective of 118, whereas we look towards 117 now. Technically, we're still holding quite well. And from this closer Marubozu candle, I feel that the market will probably show any pullback to be shallow, and therefore looking from the support level around 116.45 to 115.75 that may see eventually claim that 118 figure 25 target and reassess. Gold, well, we've had 3 spectacular candles in this rally since rebounding off 1,620 and now taking out the level of the top side call of 1,729.33, which has put a further target now on towards the region of 1,784.88. I'm a little bit careful as the market most probably will trigger further stops as this rally continues, but still likely to be whipsawed and maybe see wider ranges due to the candles that we're seeing here. So therefore the support now is seen around 1,740 and the immediate target is top side is 1,758 to 70.72. Finishing up with oil, the market was a little bit choppy as well, but pretty much unchanged from the previous day, around $85 a barrel. In light of the pattern though, I still feel that we are looking to the downside and therefore gives an immediate target around 83.70 and re-evaluate from there, as a break would give a further decline down to 78 to 81 as an objective. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.